Hi, this is Dylan. Welcome to my daily trading analysis video. Today is a Monday, 15th of December. So we're going to start off with the euro against the US dollar. Alright, what we're seeing right now is the price has been resisted, or rather before that it has broken above the falling trend line in the 4-way chart, as you can see over here. Broken above and got resisted by the 200 moving averages, came down again and went up and got resisted once again at the 200 moving averages. Alright, so that's one thing to take note of. Secondly is that back to the daily chart, there was previously a falling trend channel. Right, so this is the channel. Zooming back to the 4-day charts. Right, that was since the 5th of August. Right, so it came all the way down, broke below the falling trend channel and the bottom of the falling trend channel has become a resistance. So as you can see over here, price has been resisted numerous times together with the 200 moving averages. And right now, although price has broken above the falling trend line, but it's still trading below the bottom of the falling trend channel. Therefore, it is pretty much still in the bearish zone. And therefore, right now, if we zoom into 15-minute charts, we do see that price is making lower highs. There's a reversal. There's a magic candle over here with confirmation, and price begin to fall further. So this could be the time when back to the 4-day chart. This might be the time where price begin to continue to fall even further back to the major trend of a bearish trend itself. Alright, so this could be a possible trading setup to go for the shorts. The stop loss level wise, I would advise it to be at least 30 to 40 pips higher than the bottom of the previous falling trend channel. First level, of course, will be at the falling trend line. As it touches falling trend line, it might use it as a support level to rebound. And of course, if it breaks below, then of course we'll look at the previous low as the next support level. Right, so this is for the euro against the US dollar. Next, we have the New Zealand dollar against the US dollar. Right, so this 4-day chart. As we know, there is a falling trend channel. Right, price went all the way down to the lowest at 0.7607, came up and got back into the falling trend channel, reaches the high at 0.7865, and we plot a Fibonacci retracement right from the top to this bottom. You see that price has been resisted at the retracement level of 61.8%, price of 0.7834, and it begins to fall. Right, so price has begun to fall and moving closer back to the bottom of this falling trend channel itself. Zooming into the 15-minute charts, we are seeing the price has been resisted by the 55 moving averages. Right, there's magic candle confirmation. And one thing to take note is that there is a minor falling trend channel in the 15-minute charts. And one thing to take note is the price has broken below once, came up, got resisted at the 55 moving averages, and it began to fall again. So there is a likelihood that price may break even lower, and therefore the first level support level we're going to look at is at the bottom of the falling trend channel, followed by the previous low. So that's for New Zealand dollar against US dollar. Next we have pound, right? The pound against the US dollar. Right, so as I've been mentioning, that there was a falling trend channel where price has touched bottom but has yet to touch the top of the trend channel itself, and finally we are seeing after a very long period of sideways movement, trading within this range, it is finally about to reach the top of the falling trend channel, alright, very close to the 200 moving averages as well, which has been a strong resistance, as you can see from the past chart pattern. Alright, and one thing to take note is that the current resistance level is pretty strong, as you can see. Right, the price of 1.5733. So there is a possibility the price may continue to get resisted at this level, and price may just tumble from here, or if not, we might see a spike going all the way up, touches the top of the falling trend channel, and it begins to reverse all the way. Alright, so that's for the pound against the US dollar. Of course, first level is over here, at the bottom over here, 1.5608, followed by the previous low, 1.5553. Right, so that's for the pound against dollar. Of course, if we are going to short any movement at this current level, the appropriate stop loss would be at the price of 1.5827, right, above the falling trend, the top of the falling trend channel, as well as above the 200 moving averages, because over here is a very potential resistance level, but price has yet to touch. So that's for the pound against the US dollar. Next, we have the Australia against the US dollar. Right, as we can see, the price has recently made a broken a new low. There was a falling trend channel in the following charts. Right, so this is the falling trend channel, and we have seen the price has already broken below, but it came up, it uses the bottom of the falling trend channel as a resistance, and has been trading below the bottom of the falling trend channels, and therefore it is still it's a signal that price is still within the bearish zone, and therefore we are still expecting price to fall further. Right, and one thing to take note is that price has yet to touch the final exhaustion level at the price of 0.8105. Right, this is the level measured by the Fibonacci expansion. Right, final level at exhaustion level of 161.8%. So just think of this level, and therefore, since price is yet to touch the bottom, the final exhaustion level, then we are still expecting price to fall even further. Right now it's still trading below all the three moving averages. Yep, so you can see the price may fall any sooner. Right, so that's for the Australia against the US dollar. Final level at 0.8106. First level at the previous low, 0.8211. And of course, personally, I'll be waiting for price to retrace again if I were to go for a short, because price is currently in between, in the middle of the bottom of a previous falling trend channel and the final exhaustion level. So it is not a very good price to short anyway. Anyway, so that's for the Australia against the US dollar. Next, we have the dollar against the Japanese yen. Right. First thing to take note is that, as you can see, price has already broken below the previous rising trend channel, and we are still expecting price to retrace further. But one thing to take note is that at the price of 117.32, right, 117.32 has proven to be a very strong support level. If I zoom in the 1 hourly chart, right, as you can see, it's a strong support level. Price came all the way down, touches the same level again, So right now, we'll be waiting for price to fall further back to the support level, or for it to retrace further, okay, with the Fibonacci retracement. Okay, the first level will be looking at the 38.2% retracement level to go for the shorts, or rather, if it is able to appreciate all the way back to the retracement level of 61.8%, somewhere close to the previous the bottom of the previous rising trend channel. Alright, so these two are the key levels. If you are looking to go for a short, that means you're anticipating that the retracement will continue further. Or if not, we'll just wait for price to come back to the bottom at 117.42. See if there's a setup to go for a long. If you're anticipating that the retracement has is going to be is coming to an end and is going back to its major trend of a bullish trend itself. Alright, and finally we have the dollar against the franc. Right, pretty much the similar as the euro against the US dollar is that price has broken below the the rising trend line, and it's seen supported at the 200 moving averages, where the 200 moving averages has been proven to be a strong support level based on the past chart pattern. And zooming to the 15 minutes charts, there's already a magic candle followed by a confirmation, and price has begun to appreciate. But of course, right now we are also seeing a magic candle over here. If right, so just to take notes. Right, so looking at the one-way chart, of course there's a reversal candle as well. Hopefully this forms a confirmation. But just as stochastic is at overbought. So if price were to continue to appreciate, the first resistance level to take note is is at the rising trend channel, rising trend line. And if it breaks above, we might want to take note of the resistance level at 0.8777, followed by the previous high at 0.8840. Of course, the stop loss itself, we would like to place it below the 200 moving averages, preferably about 30 to 40 pips away, the price of 0.8594. Right, that would be a good stop loss level if you were to enter along for this trade. Right, so that's all for today, and thank you for watching. I'll see you again.